Good morning, ladies and gentlemen. My name is Greg Mikulowski, and this is going to be our morning report, taking a look at what has happened in the market, and where we may be going in some of our major currency pairs. Before we start, let's take a look at the strongest and weakest of the major currencies. We have the euro versus US dollar, which is up against all the major currencies, followed by the pound versus US dollar. The weakest is the Aussie versus US dollar and the New Zealand versus US dollar. So there seems to be some flight out of the risk on currencies, if you will. The US dollar is unchanged or near mixed. In early trading, we have declines versus the euro and the pound, and we have gains versus the Aussie and the New Zealand offsetting each other, and in between we have the yen, the Swiss, and the Canadian dollar, all little changed in the middle. Taking a look at other markets as we open up here in New York, gold is up about $1.34 or 0.07% at $1,790. Silver is trading up around or down around 5 cents, or minus 0.22% at $20.61. The price of crude oil is up about $1, about a buck on the day, or 1.0% at $91.75. And as you can see on this chart, we're above the 100-hour moving average in that commodity. And finally, we have Bitcoin, which is losing some ground over the last few hours and trading back below its 100-hour moving average at $23,365.41. If we take a look at the U.S. debt market, we have the 2-year yield, which is moving back to the upside at up about 4.7 basis points currently at the moment. The 10-year yield is trading up as well, around 4.4 basis points at 2.8%. We are below the highs that we saw last week that moved the yield up to around 2.86%, and well off the high that we saw back here just last week, I guess. Or this was on July 21st, a little more than that, at 3.08%. If we take a look at the foreign markets, we have the German DAX, which is down around 1.1% currently at the moment. The France's CAC is down around minus 0.5%. That's what it looks like on the chart. The UK FTSE 100 is up 0. Actually, it's unchanged on the day. Spain's IBEX is up again, also unchanged on the day. So the German DAX and the France's CAC are leading the way to the downside, where the pound and the Spain's IBEX is near unchanged. In the European debt market, we see German yields up around 5 basis points. Near the bottoms here on the chart, the France's 10-year also up a little bit and above, finding support against the 100-hour moving average. The UK 10-year is also staying a little bit above its 100-hour moving average at 1.98%. And finally, the Spain's 10-year also looking very similar. All these 10-year yields seem to be above their 100-hour moving averages, which is keeping a more upward bias to the trajectory of interest rates within Europe, although still near low levels here for the time being. So watch those moving averages in your trading. As far as the data or other information out here today, China continues to do their firing exercises off the coast of Taiwan. If that continues, that's going to make some problems or create some problems, additional problems as far as supply chain out of Taiwan. The shipping lanes are clogged because, well, bombs are being bombarded around the island nation. So that's an issue, and so tensions continuing there. And we have today on the calendar, it's fairly late. We have preliminary non-farm productivity coming out at 8:30 with the unit labor costs. Anything that's inflation related is certainly going to be of interest. The unit labor costs quarter on quarter expected to rise by 9.4%. That's lower than the 12.6% from the previous quarter, but still a high number relative to that could help push up inflation. Non-farm productivity expected to decline minus 4.6% as unit labor costs soar, decreasing the productivity of businesses at the same time. Of course, tomorrow we have the CPI data coming out of the U.S., which is going to be a big number with the expectations of 0.2%, and the year-on-year coming down to 8.7% from 9.1%. However, the core measure is supposed to see an increase up to 6.1% year-on-year from, I think, 5.7%. So there's going to be that little problem between those two, which is going to have to get resolved by the markets and with the price action. So let's take a look at some of the major currencies here from a technical perspective. The euro versus US dollar, put on the hourly chart here, and we can see that the levels remain the levels of the euro versus US dollar remain confined within our trading range, but above the 100 and 200 hour moving averages today. You can see in the overnight or yesterday at the close, the price closed right in between the 100 and 200 hour moving averages. The price doesn't know which way it wants to go. So today in the Asian session, it didn't know where it wanted to go, so it traded for the most part in between the 100 and 200 hour moving average. Finally, in the early European session, we did see a spike to the upside here, which saw some follow-through buying up near our swing area here. That was a better move than we saw yesterday. So we did get some satisfaction from the buyers on the break of the 200-hour moving average. Good news for you. And but the price has since come back down, back toward our 200, back toward our 100-hour moving average. Currently at 1.229. This remains a topside hurdle to get to and through, followed by our 50% retracement and high from last week. On the downside, it would take a move back below the 200 and 100-hour moving average to increase the bearish bias in that direction. Let's take a look at the dollar versus yen. As mentioned, this currency pair is a little changed, and that's what we're seeing on the chart here. If we were to the 50% retracement of this move to the downside is where the price is trading above and below, and we're also trading above this swing area here, which has swing lows and swing highs and swing high and swing high and swing high and swing low through here. That didn't really, found some early buyers against that area. So we need, if the price is going to go lower, we need to get below the swing area, and also this 100-hour moving average is creeping up toward it. So that would shift the bias to the downside here for the euro versus US dollar if the market traders would push that level down in that direction. Conversely, the high price from yesterday afternoon, followed by this low price over here, sort of gives us a level here where the market seems to be saying, well, that's a ceiling at 135.10. Get above that level with momentum, we could see a run back toward the 61.8% retracement of this move down at 135.94. Let's take a look at the pound versus US dollar. And this currency had more momentum. Remember, I think the euro and the pound were the strongest of the major currencies, and the price did move up to test this trend line. Also, it moved above the 100-hour moving average for the first time since August 4th through here. That was, I guess, last Thursday. So it wasn't just a few days ago, but again on Friday or yesterday's trade, the market came up to the 100-hour moving average, found sellers. So getting above that level should have led to further upside momentum, but there were other targets, including the trend line and the 200-hour moving average to get to and through, including the high from yesterday, which was another hurdle to get through. These are things that happen when you have a corrective move of what has basically been more of a downward bias, at least over the last 7 or so trading days. Couldn't do that. The price fell back below the 100. Buyers turned to sellers. That's what you do as traders. You try to hop on a trend and have the price move in your direction, and if it can't do what it's supposed to do, you move back to the downside. 38.2% retracement in this swing area. You can see, you sort of blur your eyes and see a ceiling here, a floor here through here, and then above and below that level over the last few days as the market tries to figure out which way it wants to go. But if we were able to get below the 38.2 and this yellow area at 1.2089, then that should increase the bearish bias on the downside. Take a look at the dollar versus Swiss, and we're near unchanged on the day after dipping lower lower. That dip to the downside did move below the low from yesterday, and also these highs and maybe this lows through here. We're near the lower extremes for this pair, so there's a lot of, there's always going to be some support buyers against old lows, especially since we have the corrections here. But on the top side, what is of interest here for me from a technical perspective is how the price came down to the 200-hour moving average, came down to the 200-hour moving average, moved up to the 100-hour moving average, and then broke through the 200-hour moving average and corrected up to the 200-hour moving average. So needless to say, the 200-hour moving average at 0.95577 is a key level to get to and through if the buyers are to take more control today. So or keep below if the sellers are to keep control. You always have a choice at these levels here, and because risk can be defined and risk can be limited against the level, so be aware of that. Finally, the dollar versus Canada. Well, not finally, because I want to take a look at the Aussie versus US dollar a little bit, but the dollar versus Canada is trying to figure out what it wants to do as well, staying between its 100 and 200-hour moving average, and 50% and 61.8% of the move to the upside here. Those levels come in at 128.75 on the top side, 128.49 on the downside. We're trading in between those levels, looking for the break. We tried to go below to the low side earlier in the London morning session, could not do that, so the buyers are coming back in. You can see how the ceiling here against the 100-hour moving average has been respected, along with the 50% of this move to the upside. So there's a couple of reasons why getting above 128.75 is a key level for that currency pair. Finally, the Aussie versus US dollar falling down to the 200-hour moving average after trading up and down, up and down, up and down here. The 200-hour moving average comes in at 0.9666. This is enough to make the Aussie versus US dollar one of the weakest currencies. It's not a lot, but folks, we are down on the day, but we were higher, so it's sort of misleading that it's the weakest. You kind of think, oh, well, it's been moving to the downside for a long while. No, it's been trading up and down. But what we see here is the 200-hour moving average and the 100-hour moving average are in play here today. If we break below that level, that would turn the bias to the downside. Hold support against this level. If you like the Aussie versus US dollar, this is a place you want to buy, and hope that the price moves higher and doesn't go below the 100-hour moving average, where I would stop your trade out. So there you have it, a look at some of the major currency pairs and markets. My name is Greg McGlosky. Good fortune with your trading today. Bye-bye now.